Hello everyone, welcome to Trade Breakdown and NQ. Now, I'll be breaking down this trade based on the chapters we've discussed so far, and I'll also delve on some other concept briefly too. That way, we'll have this smooth transition to level 2 of CPI with these new concepts that I've prepared for you, right? Now, last chapter we discussed time frame alignment and time frame selection, right? Now, as intraday traders will be using the 4 hour, the 1 hour, and the 15-minute time frame, right? Now, the 1 hour isn't as important as the 4 hour and the 15 minute, but you could definitely use it for gaining conviction in your analysis and in your trade ideas, right? Now, obviously, as I said before, we'd be also using the higher time frame like the daily and the weekly in our analysis too for determining our drawn liquidity and our directional buys, right? So let's start with the breakdown. So for NQ, the 4 hour candles are 1 hour ahead, right? So you'd be using the 2 Eastern time, 6 Eastern time, and the 10 Eastern time for your 4 hour candles, right? So starting off with the 4 hour, we can see that since last few weeks we are in this bullish trend, and we keep making higher highs and higher lows, right? And price is respecting this bullish trend by rejecting lows and breaking above highs, meaning it's not able to break below lows and it can only reject it by taking counter liquidity and then moving higher, right? This is what a typical bullish structure looks, rejecting lows and breaking above highs, right? So now based on market profiles, we know that in bullish structure we start off with a range, right? And then after that ranging profile ends, we then expand from that range either straight away or after a manipulation happens to a key level, right? And then after that expansion profile, we then either have another range or a retracement before moving higher, right? And expanding higher. Also, one thing is that this is just basic market profiles, right? We haven't integrated time factors with it, right? Which is going to even further refine your perspective even more. We'll delve on that later, but for now let's discuss what we are dealing with here. Okay, so let's get in the breakdown right here. So right here you can see that as soon as this week opened right here, right, we straight away went into a ranging profile, right? Now we know that according to market profiles, after a ranging profile ends, we can only have two possible outcomes. We can either have a manipulation profile or an expansion profile straight away, and in this case we got this expansion profile straight away, right? Now we know that after an expansion profile ends, we cannot have an expansion profile, another expansion profile right away. We cannot have another expansion profile right away, right? That's not how price moves. The way how price moves is after an expansion profile, we can either have a ranging profile to form and then price can expand from there, right? This is the one scenario we can have after expansion profile ends. Or the second scenario is that we will retrace back to a key level and then we're going to react off of that key level, and this is going to be a retracement profile for us, and then we're going to expand higher again, right? In this case we got what we got, this retracement profile, right? And this retracement, and with this retracement profile we tested this key level right here, and then we expanded higher again, right? So we started off with the ranging profile, an expansion, a retracement, and then another expansion. When you were right here, if you hadn't used market profiles, then you would be expecting higher prices, which would be a wrong way to approach the markets, because after an expansion profile ends, we cannot have another expansion profile straight away, right? We will either have a range or a retracement before making another expansion, right? Now so now we've got this candle right here, which I was looking at as a key level for price to retrace to, right? Now I told you that this was this expansion profile right here, right? And I told you that this expansion profile ended right here. Now you might be wondering, how did I expect it, or how did I found out or determine that this expansion profile is now ended and now I can anticipate a retracement, right? You might be wondering that how you can do it, right? So the way how you can do it is, when price right here, first of all it has to take out a key level, and the key level for me here was this Monday's high right here. So what price did on Tuesday is that it took out Monday's high, right? right? So what it did, so let me try it again. So we've got this ranging profile, then we've got this expansion profile, and now the way how I was expecting retracements is, first of all, I was waiting for a key level to be tested, or waiting for price to take out liquidity, which was in the form of this Monday's high right here. So what price did is, on Tuesday it took out this Monday's high right here, right? But that wasn't enough. Next thing I did is I waited for price to have a CSD, or to form a CSD on lower time frame, so which is basically a change in the state of delivery, and that CSD formed or occurred after this down close candle right here, closed below these candles right here, right? I'll tell you how I determine this CSD to be valid, but let's focus on the higher time frame for now, right? So what you need to remember is that after this down close candle, and after this candle closed below these candles right here, a CSD happened, we took out liquidity, and now I can expect this expansion profile right here, which is this price action. Now I can expect this expansion profile to end, and now we can enter a retracement on the lower time frame, which is going to look like a reversal on the lower time frame, right? A retracement on the higher time frame looks like a reversal on the lower time frame. That's how you logically look at price action, right? That's how you look at price with a logical perspective, right? So now you learned that the way how you can expect a certain profile to end is by waiting for a CSD. In this case, we had this CSD, which confirmed that this expansion profile is now ended, and now I can expect a retracement. And with this retracement, my drawn liquidity was this key level right here, right? Now I'll tell you in a minute why I consider this candle right here as a key level, but you can see that after we tested this key level, the retracement profile ended, and we then had another expansion higher again, and we made another high, right? So we started off with a ranging profile, then an expansion, a retracement, and then another expansion, right? Now, on the lower time frames, there are certain time windows where price expands, and other time windows where price retraces or reverses, right? This is like a really important time concept. But also at the same time, you need to remember that it's all relative, meaning time is relative to price the same way price is relative to time, which basically means that they are both dependent on each other, right? For instance, you cannot for sure say that on this particular day price is going to reverse, or on this time of the day price is going to expand, right? That's not how it works. The reason time works is because of price, which means there has to be certain concepts based on price that are in sync with the time factors, and they are integrated with each other in a logical framework, right? And only then the time factor will work so accurately. And if you're going to use it alone without any idea whatsoever, then it's obviously not going to work, right? So what you have to do is you have to make sure that time is in sync with the other concept for it to work accurately. We know that we look at price with a logical perspective, right? And we use all of these concepts in a logical framework too. The same way we're going to look at time with a logical perspective that is based on a proper framework and not based on patterns. And only then you will able to see the magic of time and price when they are integrated with each other and when they are in sync with each other. Now, getting back to the breakdown, here you can see that we had this expansion on Monday. And then with this expansion, we formed this Monday's high right here. Now, even though I was expecting bullish prices and the structure was bullish, which means price was rejecting lows and breaking above highs, right? Even with all of those factors, price first had to retrace back to its origin right here and test a key level before moving higher. Now the reason why I expected price to retrace before expanding higher is because of market profiles. We know that according to market profiles, price never moves in a straight line towards its drawn liquidity. It always starts with a range, and then after a range we form an expansion profile and we expand towards the drawn liquidity, and in this case we expanded higher, right? And then after an expansion we always have a range or a retracement before we make another expansion, right? This is generally how price moves. Now the reason this price action right here is considered a key level and we call this is an order block is because first of all this candle right here generated liquidity in the form of this FEG, right? Now remember what I told you in chapter 3. When a particular price action generates liquidity, or it takes out liquidity, or it fills liquidity, such price action is considered a key level. When a price action does either of these three things, it would be considered a key level, and you could call it whatever name you want, right? Or you could just call it a key level, right? Now this candle right here generated liquidity in the form of an FEG. That's why we're gonna call it a key level, and this is going to be a key level on the 4 hour for us, right? From which we can expect price to expand higher if it retraces it to, right? Now you can see that we have this Monday's high right here, right? And then on Tuesday I was looking for that high to be taken, right? And that high to be taken at a key time, right? Now, if this high was taken during the London Open or the Asian session, then I wouldn't have had that much conviction in this trade idea, because London Open session and the Asian session aren't that high probability for retracements or reversals. These two sessions are mostly suitable for continuation price action, right? That's why I wouldn't have had that much conviction if price had taken this Monday's high from 1 Eastern time to 5 Eastern time, right? But if this high is taken during the New York kill zone or the London close kill zone, then it would be a high probability trade idea for me, because I know that from 7 a.m. right to 12 Eastern time, which is the New York and London close kill zone, this time tends to be a good macro for reversal and retracement, right? And in this case right here, you can see that this high was taken during the New York kill zone at 9:30 a.m., which is a good macro and a good key time for reversals, right? And then as soon as this high was taken at that particular key time, I started looking for reversal trades on the lower time frame. And as I said before, retracements on the higher time frame I looked at is reversals on the lower time frame, right? Remember that a higher time frame retracement is a lower time frame reversal, right? That's how price logically moves, and how you can look at it with a logical perspective, right? So in this case, you can see that everything was in sync, and there was a proper logical framework behind this trade idea, right? And there was a proper higher time frame and lower time frame thought process based on time and price that were together both in sync with each other, which led me to taking this trade right here. So the main thought process on the higher time frame was that I was looking for this Monday's high to be taken and for it to be purged, and then price to retrace back to this key level right here at a key time, which was the New York and London close scale zone, right? Now going to the lower time frame on the 15-minute, the thought process was the same, but I was looking for a New York reversal, right? And right here you can see that during London Open and Asian session, we formed this range right here, right? We range during that time, and then during New York Open at 9:30 we took that high and then immediately reversed from there. And here I waited for a model 1 entry, which is basically an order block entry here, right? So you can see that this candle right here took that high, right? So this candle took out liquidity by purging above Monday's high, and now I'm gonna wait for this candle to be engulfed, and then when it engulfs and price closes below it, it's gonna become a key level for us, which is known as an order block, right? And then my entry is gonna be at that order block's open, and I'm gonna drive it down with my stop loss above that order block's high, right? And then for target, you can either have a fixed risk to reward ratio, or you could have a dynamic risk to reward ratio and target a key level, right? We're gonna discuss that in the later chapters. Now going back again to the 4 hour time frame, here you can see that as soon as we tested this key level right here, our retracement profile ended, and then we reacted off of it and had an expansion which made another high and continued that trend. Now the way how you could have anticipated or found out that this retracement profile has now ended in an objective and mechanical way is by going down to the lower time frame based on time frame alignment, and then seeing a CSD or change in state of delivery on the lower time frame, and that would confirm that the market profile has now ended, and now we can start another market profile, which in this case was this expansion profile, right? This was the trade breakdown on NQ, and this is basically how you base a trade idea on the concepts that I've taught you so far, right? Next week we'll start level 2 of CPI, which means we're going to start improving and refining our knowledge even more, and we'll move on to a bit more of intermediate concepts which will increase your understanding of price action even more, right? In level 2 of CPI we'll discuss the rules of range trading, right? We'll discuss what is turtle soup, and we have some other hot topics too based on time and price, right? And of course I will break down every trade with it so that way you can see the live application of these concepts. Thank you.